Watch as the car market crumbles under the weight of inflation. Things have never been the same. The average transaction price, the average new car price goes for about $49,000 today. But merely a few short years ago, $43,000 really is more likely what it should have been. Had we not seen some of these crash during the last 4 years, based on the average year-over-year 3% inflationary increases, we should be sitting at an average price of $43,000. But instead, these car manufacturers continue to jack up prices year over year, selling higher trim levels, dropping on lower trim levels, and the availability of new cars has grown, mainly because of inflation. People have not got the money. They don't have the cash that they once had, and so people aren't buying the brand new vehicles like they once did. Obviously, with prices on the climb, we're continually see prices hiked and rising for 2025. We wonder if the top will ever be dropped, if the bottom is going to bottom, if the bottom's going to fall out on us, and clearly it feels like it is right now. There's clearly in my mind, a serious problem. The car market is crumbling, both new and used, and there's different phenomenons going on there. The new market is failing because prices are far too high. They've now grown to a proportion, out of proportion, where people don't have the money to buy them anymore. Where we're tapping close to $50,000 in average transaction cost, people can't afford $1,000, $1,200, or even $1,500 a month car payments. That's cost prohibitive. We're also recognizing that insurance costs are rising on a lot of these brand new vehicles, and people don't have the money. Electric vehicles with expensive tires, technology, and electrics are causing people to have to go back after warranty and pay for extensively expensive repairs. So people are starting to back off. Hence, we're starting to see a massive increase in the availability. We're seeing vehicles from the Stellantis team going up 150, 160, 200 days supply, while we're seeing Toyotas and Hondas and Lexus vehicles suffering from quality control issues, and while they're selling quickly, their reputation is crushing car brands that we once knew and trusted. So even as time goes on, manufacturers like Toyota, with blowing up engines in their Toyota Corolla GR vehicles. Of course, we're also seeing some of their vehicles with the 3.4s crumbling, failing. Their Lexus vehicles failing. Lots of recalls, lots of problem areas with crash test results. And the customers are no longer trusting the once trustworthy brands like Toyota. Ford, overpricing. GM, high prices as well. And their truck sales are going down year over year. But what's going on? Well, we're seeing this other market on the used car side. But we're seeing sales start to moderate there too. Wholesale prices now are changing. We're seeing wholesale prices start to average down. But there's some confusion in there because we're talking about wholesale prices. That means car prices that are affected the dealers that are trading vehicles in the auctions. The auction prices are dropping. But there's a reason for that. It's not because used car prices are dropping. It's because the quality of that vehicle is going down. Did you realize $20,000 and down? The average vehicle has over 98,000 miles. That's right. So if you're looking for a used vehicle under 20 grand, good luck, because most of those are tapping 100,000 miles and they're getting to the point where they need major repairs, major service, and another 50, 60,000 miles, and most of them are going to be scrap anyway. So the point in buying a $20,000 used vehicle is going bye-bye. And the idea of buying a $20,000 new vehicle, that went bye-bye a couple of years ago, where it's very difficult now to find yourselves a brand new vehicle. Okay, 15% decrease. Obviously what we're seeing on the sales of some of these used vehicles. But the used vehicles specifically are between the $30,000 and the $49,000 price ranges. That's right. We're seeing decreases in that price range because those are usually the late model premium used vehicles that people want. But the availability is going down. Lease returns are lower because 2 to 3 years ago, leases no longer up. They went down because the increased inflationary rates, the lending rates were escalated. So less people were buying taking out loans, less people were taking out leases. And as a result, we saw this big dip. We went from about 900,000 leases in that year, about 3 years ago. Now we're at about 300,000 leases. So as we expect more of these lease returns to hit the market, that's going to be a gone bye-bye. And that's the struggle here that a lot of buyers are faced with. We're seeing less lease returns coming back to market. We're seeing lower quality vehicles in the wholesale market, meaning they're going to wind up on the car lots. So the only products that customers are looking at on the used car market are paying premium, sometimes still over what the typical depreciated value of that late model quality used vehicle with low mileage on it. They're going to be paying way too much for those than they should have ever paid. If you look back pre-2019 or 2020 numbers, they're clearly paying too much for late model used vehicles. Okay, how do you get an affordable new vehicle or used vehicle that isn't late model? Well, you're going to have to buy something that's crashed, wrecked, not looked after, neglected, abused, and those are the sub $20,000 vehicles. But we're starting to see some really ugly trends. And as I've already said, what we typically see from back in 2019, where the average transaction price for a new vehicle was around $42,000, $43,000, and now we're pushing 50 grand. When adjusted for inflation at 3% year over year, we should only be, far, far less than we're at today. But what we're seeing is these dealers, the OEMs, are getting cocky. They're selling vehicles at a much, much higher number than we ever expected to see. Chip shortages and obviously prices on these vehicles just don't seem to be letting up. So we're caught up in this conundrum of low quality, high mileage used vehicles are about the only thing people can afford today, which we know those are unlimited lifespans because they're not going to last that much longer. Why go out and buy a 10-year-old car with 120,000 miles on it when you will know it's only going to last a limited time? You also don't know the history on it. That's where getting a pre-purchase inspection is important, but people are running out of money to even do that. People are saying, I'll forego the pre-purchase inspection, I'll forego some of those other issues with it, and I'll buy it sight unseen, or I'll just buy it as is because I don't have the extra cash. The market is crumbling. I don't know if we're going to ever get out of this market anytime soon because dealers find themselves in a predicament. Now the chicken tax obviously is a tax that was imposed many years ago that protected the big three, the GM, Ford, Ram, or Chrysler, Stellantis, those products from foreign markets that were building competitive vehicles. And so they got cocky. They started to build vehicles that were poorly made, low quality, and naturally they're charging a premium dollar. But watch as this next time frame goes on, and we're going to see some changes in the market coming up real soon, where we're seeing the Chinese market, BYD, producing vehicles that are a fraction of the cost of some of these domestics. And wait till you get a government shift or a change in who's leading the helm. And the floodgates may soon be open. We're already seeing Chinese vehicles being manufactured in Mexico, and soon the floodgates will be open to North America, as in the United States and Canada. And that's going to either crush, decimate, dissolve manufacturers from the big three because the chicken tax likely is going to be on the radar. These leaders, the federal leaders, are going to continually look at what is offered here in the North American market. Lower quality, higher prices. And of course, UAW and strikes drove prices up of labor. That's hurting matters too. Now you're locked in and it's a ratcheting effect. Once you start committing, you're paying the prices, these high wages, and now, of course, the CEOs don't want to go away and do this for free. So those people are now as well getting paid top dollars. All this money is getting milked from the cars. But on the backside of this, we've got the Chinese manufacturers and some of these foreign markets trying to knock down the door. And once they break in, and I think it's a matter of time, then what is going to happen to the Stellantises of the world? It looks like the future's quite clear that it's not a good thing. Ford, not going to be competitive either. They're losing money already on the sale of all of their vehicles, pretty much that are electrified. Mustang Mach-E, Ford F-150 Lightning are all losing money. course, their fleets are selling, but all of the big three are relying heavily on the fleet sales. Again, wait for chicken tax to drop. Now you're going to see some of those fleet vehicles being switched over to smaller import vehicles. Those are going to be done on much cheaper. If you're buying a fleet of vehicles and you're buying, think about this, 100 vehicles that you need to outfit your business. If each vehicle costs $60,000, that's a lot of money. But if you have the availability to buy a low-cost import vehicle, when you know they're going to get turned around, because most fleet vehicles get swapped around every 3 to 5 years anyhow. So if you're okay buying that slightly lower quality, but import vehicle, say from China, that costs maybe 10 cents on the dollar, trust me, the fleet market and industry is going to be crushed once they knock down the door. And that's the conversation that nobody's talking about. Everybody talks about the retail market. Oh, Joe Blow can't afford it. Cost of living crisis is beating the average worker. Absolutely, and it totally is. But what's going to happen once the Chinese market enters? You're going to have all of this fleet market pushed off to the side where these import markets are going to start to take over. Of course, the retail market, that goes without saying. If I could say to you, hey, you're going to buy an electric vehicle, a Tesla, for $60,000, or we get this BYD that has better performance, equal reputation, and the batteries are built in the same place, but I can sell you that vehicle for $25,000. You better believe a lot of people are going to look for the options, the low-cost alternatives. So right now, we're in a market, the used car and new car sectors are in a dire straits. We've got non-competitive manufacturers that are having to offer up massive incentives, like Nissan with their 99% losses in this last half, and all these other manufacturers that just aren't making the profits. BMW, they're almost trying to treat some of their electric vehicles like the iX as the sheep that they don't want. Like, send that one out to the pasture, because we don't like that very much. Because they see the writing on the wall and vehicles are not selling in electric space. All manufacturers are also charging customers extra money for the supply, or so the development and research of a lot of these electric vehicles, but they're doing it with the sales of jacked increases on their internal combustion vehicles. Of course, what does that do? Continually leans down, pushes down on the used car market, but only the late model vehicles. Hence, as I said, with the shortcoming and the short number of vehicles available on the late model used vehicle lineups and groupings, we're seeing that in 2019, vehicles under $30,000, there was 11 million vehicles available. Today, if you look, vehicles under $30,000, there's only 333,000 units available, and that's on the brand new market. So what does that tell us? That we can no longer find an affordable new vehicle. They're all going way above the $30,000 range, 40, 50. As I said, the average is now $49,000. I've even heard of hearing people pay as much as $1,800, $1,900 a month for their brand new GMC pickup truck. Why? How do people get themselves snookered? I think it's a lack of education, but that's going to catch up with the people very, very hard in a big, ugly way. And what that means is the new car market is going to be crushed. And if it doesn't compete, the import market and the foreign markets are going to make sure they compete. And the ones that can't are just going to go away. And we've all heard about what happened with groups like Pontiac and, the old Fiero. Companies that just could not compete just say bye-bye. And that's what's likely going to happen. Ford, GM, big companies, absolutely. But unless they remain more competitive, they're going to have to do some drastic things. We're already starting to see the Raptor of the Bronco. They're not selling. Nobody wants them. It's the same engine as you can get in the regular Bronco. But they put all these fancy flares and they charge you an extra $30,000, $40,000. Nobody wants that. People are in more of a cost of living crisis, just trying to feed themselves, feed their families, pay for their mortgage or their rent. They don't need that $80,000 used vehicle. Nobody needs that. Nobody wants that today. And so the days of overpaying for these highly priced vehicles, they're done. People are not buying it. And used car sales are in the toilet, other than, like I said, if you're getting into those really cheap vehicles, because what's happening now, sales are climbing in the older vehicles, the sub $20,000 vehicles, but the quality is dropping. We're getting vehicles with questionable maintenance records, because once these hit the auction house, we all know that there's no records. You trade in your vehicle. Here's the key: trade it into the dealer. The dealer then passes that on to the auction. Records are gone. That's it. So we're losing the quality. We don't have the traceability. Dealers have become more scrupulous. And as they start incentivizing more, we're starting to see the real truth of the matter. People still aren't buying. I mean, sure, Nissan selling cars, record sales, sure. But they're not making a profit. They're not making $1. And that's the only way they can sell a vehicle. But even manufacturers like Stellantis selling the Rams and the Jeeps, they're not selling vehicles, even with the massive incentives. Oh, I know somebody's going to say, yes, they are. They are selling. You see a new Ram there and a new Jeep there. Yes, of course they're selling, but not enough to be sustainable. And this is the point of the conversation. Nobody can really afford to buy these expensive new vehicles. And it's every brand. And even the cost-effective, affordable, reputable brands that were known to be reliable, like Toyota and Hondas, just not providing that level of reliability that people expect. People are throwing their hands in the air and almost giving up. They can't trust the market as a whole. Dealerships are known to have trusty reputations. The OEMs are getting greasy, and the CEOs all want more money. And obviously the customers just don't have the cash anymore. Where does this leave this entire stalemate? The whole environment, new cars, used cars. We're in a rough spot right now. I'd love to hear your thoughts down there. Please do drop a line, because what does the future look like for the automotive industry? Please do drop it. Hope to see each and every one of you real soon. Talk to you then. Bye-bye.